Inflation's on the rise and interest rates are likely to follow suit. The cost of living went up by 4% in the year to January, twice as fast as the government's target rate for inflation. The Bank of England Governor, Mervyn King, blamed it on higher petrol prices and January's hike in VAT. But although he warned it could rise as high as 5% in the next few months, it was just a temporary problem. An argument many economists say is starting to wear thin, as our economics editor Faisal Islam now reports.
With petrol prices at an all-time high as oil costs soar, a record monthly rise in the price of a tipple as VAT went up, and a meal out also pushed higher by that tax hike, inflation's back. But is there really nothing that can be done about it?
I think we've got the worst of all worlds now, an economy which has slowed down, where unemployment is rising, people's living standards being hit really hard this year, and yet at the same time the VAT rise has pushed up inflation, with many people now saying interest rates will have to rise for mortgages too. I think the Chancellor is making life very difficult for the Bank of England.
What the British government can do is support them in their decisions by bearing down on the budget deficit, which is the responsibility of the British government. And by doing that, we create the space, we allow the Bank of England to keep interest rates lower for longer than would otherwise be the case. I think that's all a very important part of a comprehensive package to secure the economic recovery.
The Bank of England is charged with hitting the inflation target, currently 2%. But today we learned the rate was double that, and many economists think it will go higher. And then there's the Retail Prices Index, an alternative measure of inflation, and that's over 5%. It's important because it's the basis for many wage settlements.
I think it's fair to say that inflation is primarily being boosted by a number of temporary factors, and once you strip them out, inflation looks a lot weaker. Of course, patience is starting to wear thin with the argument that it's only temporary factors pushing up inflation, because there has been an ongoing succession of these temporary factors.
Today, Mervyn King was obliged to send the Chancellor yet another letter, a legal requirement to explain why inflation is so far from target. He identifies the rise in VAT, the continuing consequences of the fall in sterling, and recent increases in commodity prices, particularly energy, as the three problems. He believes these will fade away, but I do not wish to conceal that there are real differences of view within the committee. That's the 9-member Monetary Policy Committee that votes on British interest rates. Whatever the excuses of Mervyn King to his now regular pen pal, the Chancellor of the Exchequer, out here in the real world, the inflation is itself very real. And the nightmare scenario may be beginning to arise, where people begin to expect inflation of 4 or 5%, and it becomes self-fulfilling. At this childcare centre in Bracknell, they look after the toddlers of the M4 corridor. We already know there's some evidence that inflation is pushing up wages of their parents, the engineers and technologists. But the surprising thing, perhaps, is that the nursery owner is also seeing it with his staff.
We feel the full force of the VAT increase, we feel the full force of RPI going up and the salary expectations.
The pressure is to pass it on to staff?
The pressure is to pass it on, yeah. So it's unlikely that wage settlements in this sector will be below RPI in this pay round. Because if staff aren't rewarded at that level, I suspect that lots of them will be looking for alternative careers.
In this perilous balancing act between inflation and growth, the Bank of England today implored to avoid going overboard on raising interest rates by business leaders.
We are in unprecedented times. We have a bank that has to look at two very different objectives, of preventing inflation seeping back into the British psyche, but also keeping the economy going when interest rates are virtually nominal. In those circumstances, I think they need a little bit of slack, but they have to keep their eye on the long-term ball.
And so there were some signs today that the bank is preparing the ground for higher rates and perhaps multiple rate rises this year. With the economy still officially shrinking, this so-called stagflation light seems to be a rather heavy burden.
Well, now live to Faisal now. It's a question I've asked you often before, but perhaps tonight with a little more keenness. Are interest rates around the corner going up?
Well, two facts, and then we'll just try and work out where it's going later. I mean, the first thing, this is the first time that the Consumer Price Index inflation has gone up between December and January, month on month, ever. So it shows you the inflationary headwinds here.
Well, that's VAT, though, isn't it?
Well, that's VAT, but there's other factors from the falling pound and from commodity prices too. But secondly, on growth, Britain, as we know, shrunk by 0.5%. The other European major economies announced their result this morning, and they all grew. Germany by 0.4%, France by 0.3%. So Britain, if you like, sort of maybe perhaps the sick man of Europe on that measure. And so that shows you the vicious dilemma the Bank of England has. These are two conflicting directions for them to go in. There was a hint in this, which is the governor's letter to the Chancellor, often ignored, but this time there was a little hint about following market assumptions on interest rates. In English, that suggests perhaps that interest rates could go up 2 or 3 times by the end of the year. No need to panic though, that's just above 1%, still very close to historic lows, but still a sign that the tanker may be turning on interest rates. And we will know more tomorrow at the inflation report from Moon King.
Faisal Islam. And you can read more on the latest inflation figures and all the latest economic news via Faisal's own blog on our website at channel4.com/news.